Justin Pulitzer. This is my midweek video for Wednesday, January 11th, 2022. I'm filming it on Tuesday at 10:42 p.m. So, we're all kind of waiting with bated breath for this CPI inflation read on Thursday. I think last week was a little bit slow. I think a lot of people were still away for the holidays. This is sort of like the first real week back, and we're seeing allocations as we would normally expect to see in January, the January effect. As far as our sentiment goes, not quite over the mark, over the 50% mark, although maybe if we took it now, it might be. But pulled back into the jobs number, now up again, and we'll have to see how it is post-CPI. As far as the CNN gauge goes, they're bullish, back up to 50%. I mean, this was 38% a week ago, and the prior close was 47. Often when we hit 50, there's a little back off before it can still go further, but it is what it is. As far as things to note, Fed heads are out speaking. They still have more work to do. They seem hell-bent to get to 5%. The market's sort of yawning. Doesn't seem to believe them. The economic data has been coming in a little bit slower, and people are of the belief, or at least telling this narrative, that the Fed might chill out. I'll be curious to see what the probability is of the Fed hike after the Thursday CPI. We've been talking about it. It's been about 2/3, 1/3, with the Fed only going about 1/4 of a point. And if it comes in as a hot number, there's always the potential that that jumps up to 0.5 point, and the market would not like that very much. So I think that's going to be the main tell after the CPI data, whether the Fed is going to hike 1/4 of a point or 3/4 of a point after that. It may take a day, that the CPI plus 1, or even just the day of the CPI, but we'll examine that. I don't have the tab up, but as we've said, it's been 2/3, 1/3, and sometimes even 75%, 25%. So traders are of the opinion they're only going 1/4 of a point, that they're going to slow down. So, yeah, we're going to have to see how that goes. As far as the headline data goes, I mean, Wells Fargo now, they're the number one mortgage lender. They're going to be scaling it back. That's a thing. That industry is pretty much frozen at this point. It's interesting that they would scale it back now with interest rates as high as they are, and they could actually maybe make some money on it, but I guess the business is slowed down so much that they can't justify having that much staff, so maybe more layoffs to come there. We all know about the Goldman Sachs layoffs and the ones coming in tech. So we're going to have to keep a close eye on that. I think we need to see a spike in the unemployment rate, or at least a real collapse in the economic data to kind of stay the hand of the Fed, but they seem to be on course for at least 1/4 of a point for February. VIX, not that impressed this week. I do worry coming into the CPI data if the VIX is coming in down near the lows when puts get too cheap to buy. When puts get too cheap to sell, they're often just right to buy. I was looking around for some ratio plays. It's really not all that much, with the exception of a handful of stocks like Coinbase, which I used the opportunity to actually sell some puts in that as a long proxy. I'm up nicely on that with the continuation move today, but there's really not that much to do, and I was even having a hard time finding the kind of width I want in spreads. Even I was going to do a call ratio in SPY, and I couldn't get more than $4 width, and normally at least 5, and I couldn't even get that. So yeah, it's we could be on some borrowed time here. We'll have to see. Of course, we always go by levels. We always know that there is always the 1-to-1 payoff for the move lower as opposed to the 3-to-1 IV-wise higher. But yeah, I mean, it's slim pickings as far as put sales could go. So do keep that in mind, always important. As far as the bonds go, we are seeing some interesting action in them. Come on. I know you can do it. We are getting a bit of a bounce. I think that's just allocation. We're right up to the 61.8 and a good spot to trim longs into. Yeah, I think that's wise advice, whoever put that little note up there. As far as the must hold now, I would say the 50% fib, 104.52. And if you're long, just keep trailing up stops. It doesn't mean we can't go still higher, meaning rates go still lower. And yeah, I mean, that's pretty much it. You know, we came up to the 61.8. I like booking some profits here. And if we get back below the 50% fib and really take back all of the Tuesday gain, I think it's more bearish. And in general, that's going to be a theme throughout this video. Anything below the Tuesday low gets more bearish because we have a lot of potential secure high setups forming here, and I'll show you those shortly, particularly in the major market indices. Even though we had a bullish day, it doesn't negate that quite yet. We would need at least another one. TNX, a little bounce here. We don't like when that happens. We don't want the 10-year going any higher. That yield anyway. So keep that in mind. I know TLT is retail, so that always, you know, gets allocation money and so on and so forth, but keep an eye on this if this starts moseying on up, and particularly if it gets back up past the 50 MA again. You had a break here, and now a second one from a higher low. That would be problematic in my view. But shorter term, 20 MA is key. That's where the gong show really took off from. That's where the rally really took off from, so you do need it to stay below there. 36.65, that could be an early warning sign if it starts getting up over there. HYG, we talked about buying the 61.8 in this, and that turned out to be quite the trade. And now we're up into JP levels of where to sell into. And here you have the potential secure high set up here. Let me show you. I do like my little red box. But you have a couple of spinning tops. What is a secure high? It's basically a 3-candle head and shoulders, a high bookended by 2 lower highs. And anything below the head low, but in this instance I would use the right shoulder, 75.53. I would stop out if you're long. You should have already been selling, I think, into the 200 MA. I'd probably be interested in buying the dip down near this cluster F of moving averages. Got the 50 MA, the 20 MA, you got the 100 MA. You got a lot of MAs over here. So I would think that zone here could be an interesting one to maybe BTD into, for at least for a bounce play coming off the 200 MA. So yeah, 50 MA in particular. Let's take a look at XLF. So the financials are going to be reporting this week. I think, forget who goes Friday. Usually they're early in the week. I think JPM is next week. Maybe Morgan Stanley next week. I have to take a look. But what do I mean by a 3-candle secure high? Head, bookended by 2 shoulders. So technically anything below 35.16, and then more importantly, anything below 35.07 gets more bearish. I would think at least a pullback to the 20 MA. It's 34.36 would make some sense to me. And if you do get over 35.48, secure high is negated, and we could mosey on up to 35.97 and maybe even all the way up to 36.82 at some point. We'll see. But 35.97 has been attracting sellers, so I would be trimming into that area. As far as the dollar goes, and we've been using Dixie ever since they started charging, and they took the DX off of TOS. I mean, you can't even find it anymore. It used to be /DX. Sons of bees. But yeah, this is more Euro-centric. I know a lot of you know this already, but it's the beginning of the year, new subscribers and all, you know, not everyone knows everything. So a few things to note. We're kind of on a key level here. And I don't really get too worried about the dollar unless it starts getting up back over 105. They tried, and it tanked, and we're kind of bear flagging out here, so the next big support would come down closer to 101s. Now, I do think that there is going to be an attempted dollar rally at some point, soon, actually. And I don't know if it's going to really mount to much, but I do think it's going to attract attention, at least short term. So if you're short, you may be wanting to cover into some weakness, and the backside of the yellow channel has been resistance. So if we do somehow get back up to 104.636 to 105, you might want to try putting it out there as a short again. We'll see. Shorter term, 102.979 is the must hold. Anything below there could go lower. Gold. All right, so we're up against some JP resistance zone levels that we had discussed. Most importantly, the 61.8. Anyone who trades gold for a while knows this already. The 61.8 is a very, very interesting one that gold loves to respect, and it's also the big breakdown level from March. And, well, this was where it tagged, but it broke down here around May. So 74.94 all the way up to 76.98 I like trimming into. And I think, you know, if you want, you could use the 2-day low now as a stop. Let me make this gray, yeah. So anything over the 2-day high, I think you can play for the move up to the 61.8, but smaller size because we are late in the move. But below 73.88, I'd probably stop out. And if you want to do some kind of a put ratio with either the 100 MA or the 50 MA as the lower strike, I'm cool with that too, because the 50 MA was resistance here, and the 100 MA was where it really broke out from. I guess you could say the 50 MA too and the 100 MA, but that zone would make some sense to me. And we know 164.42 is some key reference support, and it would line up with the 50 MA there. Let's take a look at the Bitcoin. I don't know what the platform has decided to do here. Why does it keep going to manual? It's so annoying. They keep making these changes to the platform, and you know, I always threaten, but one of these days I am gonna leave. I'm gonna leave, and I'm gonna go to greener pastures for a whole other probable disaster. Starting to get a little allocation money here. I don't really read much into it. We've saw a lot of chop here before the next leg down. That being said, we are over the 50 MA, which had been resistance here in 12.14. So if you're long, 17,226 looks like a good stop to me there. So you know, Coinbase, I sold some puts on this on Monday because I knew that I shouldn't say I know, because nobody knows anything, but I had a feeling there would be a little bit more kicker. You know, this was sort of like day one off of a hammer, and I'll probably be looking to book those short puts somewhere between 44.15 and maybe 47.10 if we get up here. Basically the 50 MA. Quick little trade. So yeah, another day's worth of pop. I'll probably roll those off, and if we got back down to the 20 MA, I might put him back on again. So this is just a check back to the backside of the old channel, and just seemed a little oversold to me. Usually rallies come in 3s or so, or maybe even 5s. But yeah, a little more up, I'd probably take that off. But there is juice in coin puts, which scares me sometimes because it means it could go there. Oil, you know, big winner last year, and I think that there's going to be some profit taking in these names. It's below the 20 MA, it's well below the 50 MA, clearly in a downtrend. Just looks kind of choppy around here. We're getting a little bit of a warmer winter than expected, although with China coming back online, there could be some increase in the global demand, but they're getting all their oil from Russia and Iran, so it doesn't really seem like that much of a issue at the moment. I'm kind of keeping an eye, though, on the 20 MA. I think if we clear there could be a quick trade up to the 50 MA. So keep an eye on that. 76.59 currently. And then if we can clear that, 79.81 is right with the downtrend, and then maybe try a quick short there again, at least for some kind of a rollback. You know, that would make some sense to me. Let's take a look at XLE. Why not? Why not? Now I have to confess, I thought this would be weaker, but that's okay. It doesn't have to be. I think the trade, and this is also something you're going to get from me besides the secure high setup, I think we're caught between a lot of, and you'll see this in the moving averages when we get there. We're caught between the 50 and the 20 MA, and I think a break in either direction is a go with. Over the 50 MA, we could rally back up here, maybe even to 91.55 or 56. And below the 20 MA, I think we come at least down to the 100 MA. Now, but this would now be the 1, 2, 3, 4th touch. Be careful. And we technically still do have a mini, I mean, this is a little bit of a reach here, but a little bit of a look above and fail. So we could technically come all the way back down to 82s. I'd be careful. If I were long, I'm not. I would use probably the 10 MA low of day. So either 87.29, which was the 11.21 low, or if you want to use the 10 MA, because that's basically what held on the Tuesday low. So 86.49. So 87.29 or 86.49, dealer's choice there on where you want to stop. Or even try short. Let's take a look at... I'm going to pull up SPY, but we're going to talk ES and NQ first. All right, so a few things to note here. Number one, we had this move up. Oh, look, we had talked about this coming up from the bottom and then running again. We're bumping up against a key area here, 39.4575 to 39.56. This was an old reference low. And what was support becomes resistance, right? So you can see it goes back a while. Anyway, I think this is the must clear zone. If we can clear there, we can go up to 39.75 half and challenge that 39.99, and who knows, maybe even get all the way up to 40.56, although I think 40.20 quarter will be some resistance as well. I would mark all of those levels down. If you want to pause the video here, be my guest. Well, welcome back. If we start losing 39.2875 now, which was this high here, again, I don't think it's so good. And we'd be coming down from a lower high, and we would probably re-challenge this 38.9875 to 39.08 level. And if that gave, then we could come back to retest this real other breakout range from 38.75 to 38.8275, which would repair the rich close. Remember, we had the underwater close, and I had talked about in the morning, actually, put this out there, and I also had mentioned it in my super follower video yesterday, which I know most of you watch, as an area to sell into. So if you didn't sell into 39.42 to 39.4575, I would do so, at least some. Now, if we do come down here and correct, I don't know if that's going to be it, although it could be short term. So we could have, repaired the underwater close, and now we're going to repair the rich close. We'll see. So that was 38.81 half. So 38.75 to 38.8275. This would be the next really key support zone. And then, if that fails, we're looking at 38.55 to 38.52 half. So that would be the next kind of key zone. But for the bulls to keep still higher prices in play, they need to get themselves back up over 39.4575 to 39.56. In the NASDAQ, it's, I don't want to say a little more tricky, but I'll keep it this simple. They've got to stay over 11,177 to 11,182. This was this sort of breakout zone, and if they can't, again, from a lower high, problematic. Now, it doesn't surprise me where we ran into some resistance. We got very close to that 11.426 half, and if we can clear there, then we get a move back up basically to the 100% move of the range, and also the 2 times move of that prior consolidation, which would take us all the way up here to 11,535 half to 11,519 quarter, and then I would be trimming into that and then kind of playing a little wait and see. But as far as our purposes here, and this really, really pisses me off because I know I put this in and I know it's not here. Shorter term, we have some key levels to watch. And by the way, we had a little bit of a rich close today, 11,200-ish. We have a little bit of a zone here between 11,094 to 11,283 quarter. So shorter term, because 11,182 is kind of far away now. I like trimming a little here. I don't know where it'll be when you watch it because we kind of repaired that underwater close, and now we actually have a rich close to repair. But I think that level and the 61.8 are good, like, kind of markations or demarcations to, I didn't want to say demarc because I know there's that study, but I don't mean that when I say this. I just mean it's like a place of interest. I think you could use either 11,230, we'll say half or quarter, because 33 doesn't exist in fear does not exist in this dojo. This doesn't exist in futures. It trades in quarters, so it's either quarter or half. But I think you could use that as a key reference, and I think the most important, of course, is this 11,182. And if we're below there, it gets much more problematic for me. All right, let's go over to SPY. So we're into a resistance zone, and resist it did. We got up close here to that old prior high of 39.17. We got really, really close. 394.17. Sorry, I said 39.17. But most importantly was this breakdown here from the 12.6 lows. And we had a look above and kind of pushed back. And then today we held the 20 MA-ish, and now we're a little over the 50 MA. What do I mean by a secure high again? A high, an excess high in particular, bookended by two lower highs. So what would negate this move? Well, one being over 390.65. So if we were above there on Wednesday and we could get above 391.97, I would say it's negated. Anything below the 50 MA, I'd be suspicious, but more importantly, anything below 393.70 and then again 386.27 gets more bearish. Because I would view this as a 50 MA stall, and if we can't hold the 20 MA, then I think we're coming down to 10 MA at 383.44, and then likely all the way back down to the 379s, which would be 100% retracement of the 1.6 rally. Now, why is this area important to me? Remember, we were using the 1222 candle as our range kind of demarcation, and then the mini one from here at 1.3. If you lose those two highs, then I think this whole move up here is not only a secure high, but it's a look above and fail, and we'd be targeting the lower end of those ranges at 377.82 and 374.76. Okay? Obviously, the first one would be 379.06, though, because that's this candle's high, and I think we would retrace that very quickly. So, if you want to be very simple, keep it simple, stupid. Above the 20 MA, I think is neutral to bullish. Below the 20 MA, I think is more bearish. And if we start losing the 50 MA, I think that would be a sign to maybe trim back a little bit. So what you'd ideally want to see would be either up and away, or like a little pullback, get over the Tuesday and of course then Wednesday high, get over to 391.97, maybe do a little tea time there and chill, and then continue on up to the 200 MA area. Ideally, what I'm sort of hoping for, and I've told you this, would be this traders trying to make their entire year in January scenario, and we get this big run up into the end of the month, and then we could buy puts and just short the F out of it in February. That's sort of what I'm really hoping for, because I think we could get some really nice action on the downside and catch them coming and going, right? We get the money on the upside and then get it on the downside, which is always my favorite. So theoretically, quote unquote, as long as we're above 386.21, we should, quote unquote, see 397.66, 399.40, and maybe if we're extra lucky, 400 and 404.73, which was the end of the range. Remember, I told you I was trying to do a call ratio from 400 to 404. Why? Well, look where the gap fill is and look where the 2.618 is. And then where would the break even be? Well, almost up near 410. And it was really just one that was going to expire this week. So maybe I'll do it for next week after the CPI data. If the move is up, we'll see. All right. Long story short, bulls need to get over and stay over this 391.97. They need to hold the 50 MA, and if they start losing to, let's just say 386s, it gets very bearish very fast. Expected move into the end of the week is $8.60. I like to explain it to you because it reminds me of like my days in college. If you just learn the formula, you'll probably not do well on the test, but if you understand it, you will. DIA, also potential secure high setup, and this one is even better as a visual reference. Look where the low of day supported, right at the range high breakout at 334.33 and the 50 MA confluence. Anything below the 2-day low is a short to at least the 20 MA, but I don't think that would hold it, although I probably would trim a little bit into there at 333.10. I would be targeting likely the lower end of the range again between 328s and 337s. So that zone in here. Now, if we can hold, like let's say we're weak on Wednesday, but we hold above there, it's not bearish really to me yet. But if we lose the 50 MA, then I'm more bearish. And if we lose 334.33, I'm more bearish. 340.22 is the next big level, 343.09, and then I'd probably be getting out at 344.67, and maybe we got up to 348s, we'd see, but those are all levels I'd be trimming into. But the Dow has been pretty bullish, I have to tell you. $6.38 is the expected move. IWM, $4.61 is the expected move there. Problem for me with IWM, but this was a pretty bullish candle. Look at this. I mean, it's an outside day to the upside, right into resistance after having a failed candle at the 50 MA, and now you're right up on it. So this is very key here at 180.51. If we can clear there, then I think we go to 182.01 and maybe 182.91. That would be the next big resistance on the upside. Now, if we have like a dub step, then I think you got a great, like let's say Wednesday is sort of that inside day. Then you got to trade over the 2-day high for a long or a short below whatever the Wednesday low is with a stop either above the 50 MA or the Tuesday high of 180.62. Okay, and then I'd be playing for a move down to the 20 MA and 10 MA confluence at 175.64 to 175.16. Expected move, $4.61. Everyone wants to know what we're up to with the Qs, though. $7.71 is the expected move there. Apple, Tesla, all kind of although Amazon and a few of the others are catching some bids. Nice, interesting point where this held today at the 269s, and we're back over the 20 MA. So if you want to use the 20 MA as a stop, 270.96, that's cool. Very clear potential secure high. Anything below 269.92, anything below 269.28 gets much more bearish to me, and I think we'd come down at least to the 10 MA, to this 266.41, and maybe even start retargeting 263s, and then we'd see. If that fails, then we go down to 260, because this could be a look above and fail with the range, and if we do have a look above and fail with the range, we should technically rotate all the way back down to the lower end of the range, which is 260, okay? All right. If we can hold the 20 MA, where are we going next? Well, we got the 50% fib, and if we clear there, then I'm thinking between the 50 MA at 276.95 all the way up to the 2 times range of 280.58 with, of course, the 12.7 low of 278.78 in between there. So I'd be a seller at the 50 MA, at the 12.7 low, and at the 2 times range, which will likely line up with the 100-day moving average at the time. Okay, pretty simple there. Let's take a look at SMH. We had a lot of fireworks with that news about Apple maybe benching Qualcomm and AVGO in the next year or two, although supposedly AVGO CEO denied it. I don't know if that's true or not. But I do know this, that we're stalled at the 200 MA, so anything above the 200 MA gets bullish. Anything below 217.40 is a little iffy, but I would say I wouldn't be short unless you lose 214.73. I'm actually going to put an alert there. 214.72. Because if we lose there, oh boy, then I think we got a short, and I'd probably be short to, I think, the 50 MA. 210.91 at least, maybe even all the way back down to 208s. But yeah, that 20 MA, 50 MA confluence would be my spot. Basically, we stall the 200 MA, we pull back to the 50 MA, and who knows, maybe even to the 100 MA, but I'll be playing to the 50 MA. That said, anything inside this 2-day range is just that inside of range. Above it is bullish, below it is short. Inside is just neutral, but the more we build up, the more days we build inside that range, the bigger the break, either up or down, is going to be. Qualcomm acted okay. We're stalled at, again, remember I told you my theme for this video of the secure highs and also the 50 MA and 20 MA, and look where we're stalled between the 50 and the 20 MA. So if you want to be short Qualcomm, wait for it to break the 20 MA, and if you want to be long, I think you can be long as it's above the 20 MA, but I'd be more bullish over the 50 MA, and I'd probably be trimming out some, though, between 120 and 122.17, because those were reference prior lows and probably some resistance. What's up with the AVGO? AVGO. So you had that nasty sell-off, bit of a rebound today. I'll tell you what, if you want to be long, let's use 560 as the stop. Basically the 20 MA. Anything below there, no bueno. If it pulls back in the morning, you could buy it there with a stop, maybe a point below or so. And anything, if we start losing for 549.99, that could be, pretty bearish, maybe even a pullback to the 50 and the 200 MA, although technically, in technical parlance, we have a golden cross here, right? When the 50 MA goes through the 200 MA. So technically, that should be bullish. Look where this broke out from, too, right at the 200 MA. So I would think 200 MA could be support. I don't know if it pulled back there in the after hours. Let's take a look. I'd be curious to see that. No, this was the low. Happened in the morning, and then they rallied it up pretty well. What's the low here? 560? 56? So, all right, so let's use that. 550.56 is the stop if you're long. And, yeah, lines up very nicely with the 20 MA. Key spot. Intel, I've been long. I told you guys I was going to do this at the end of last year as the dogs at the Dow play, and it's been rallying. Everyone's so, wow, how did they pull the rabbit out of the hat on CNBC? I mean, come on. It's a high-yielding stock that was killed into the end of the year. A lot of stuff was just oversold with tax law selling, Are people never going to buy computers again at some point? Look, they just did the Mobileye spin out, so they got a lot of cash. So we could, get up to 31s. We probably should see the 200 MA. That'll probably be where I sell out, 35.20. And maybe if we got up to 39.71, I'd be fully out of it. But yeah, this still looks okay, and I think you could use the 50 MA as a stop now, which is currently 28.33, because when it lost that, it got nasty. So that's a good stop, I think. NVDA. Remember, I was talking about this yesterday, actually, with the big girl, and we were talking about, maybe I think she was selling out of it. Why, on the mobile chart when I was looking, I saw it as day one as a breakout. But technically, here it looks like it's just stalled on the trend line on the channel. So, very key spot here, obviously. So my analysis is, it's pretty simple. I would use 154.72 as a stop, basically the whole day's low of day, because if you lose that, you basically have 2 days that's stalled at the trend. And I'd be looking to get out at least at the 200 MA if we could get up there. Like another day, if we push up there, I'd use that as a spot to sell into. But yeah, I like low of day, 154.72 as a stop, and maybe even a short below there. Tesla, not much of a bounce. Interesting. I think people are worried about the margins and the delivery numbers, and I'm really hoping we get like some kind of final washout plunge on their earnings to maybe buy the dip into. But that being said, if you want to be long against 114.92, I like it, because that's the 10 MA. Anything below there short. Anything above, I think, could get 130.89. and maybe even all the way back up to 165. We'll see. But so far, not that impressed with the bounce, or lack thereof. Apple. All right, so just watch the glitches as they happen. So annoying. Did you see that freeze? I know that wasn't my computer, because this computer is super wicked quick. 129.04. So we now held the 10 MA. So if you want to use that, I'll tell you what, if you want to be long against 128.12, that's cool. I don't love that it stalled at the 20 MA, but it did hold the 10 MA. So I guess it's long over the 20 or short below the 10. If you get over the 20 MA, I think we'll go right up to the 50 MA, maybe even before earnings. Apple usually would have more allocation money. It has not been that impressive, though, I will tell you. That and Tesla have been very kind of lackluster. So Microsoft had that downgrade that they bought it. Remember we talked about the secure low setup? A higher low could set up a secure low, but still one time framing. Well, we ended the one time framing here. So we did it for at least one period, although you have two plungers here at prior potential resistance. 226.33 or 226.41. That's got to be your stop. Okay? Anything below there to me would be no bueno. If you fill the gap back to 239.58, I would be fully out. But I'm thinking there's going to be some resistance a little bit above here. Look where it's coming into, prior lows. So yeah, I'd probably be a seller into some strength here. Again, not that impressive of a bounce. Amazon. So I'm still sort of forked tongue on this because I'm long some shares, but I'm also into some put ratios. You know, I got to take a look at those actually to see when they expire, because I may have to re-up my ante on those. So we're above the 20 MA, which I like, and we're coming into the 50 MA and the trend line here. So I do like trimming some out into that area. It just makes some sense because it's the downtrend line, although I do like that we kind of stalled a little bit early and then kind of just came right back up over it. So I'm good for till February. I remember that's right. I remember we talked about this. I don't know how I didn't remember it at the time. I thought I knew there was some. I thought I still had some on. Maybe I guess I cleaned those up too. I guess they got filled. I didn't realize. I thought they only partially filled. I guess they fully filled out. You don't know what I'm talking about. I had some on that were expiring in like the next week or so, and we were down. I covered it around here. I was sort of pissed we had this move lower because I sort of was thinking we would get that, but I just sort of had the feeling that we could be up the next day, and sure enough, we were. So if you blinked, you kind of missed this. Now I upped it to February, but I have the shares on. I'd love to get out of those shares if we got back up to like 101s. We'll see if that takes place. I'll probably use a stop if we start losing the low of day of 87.29. But I think between 91.65 and 101s, like 99s, 101s is a good area to sell into. We could be getting some allocation money here into Amazon. I mean, it's been down quite a bit, and I do like that it is finding support. I was sort of hoping it was going to come down to the 2.618, but it may need earnings to do that. We'll see. If they rally it too much into earnings, I wouldn't be long for earnings. So, it's sort of an if this, then that. All right. So with Costco, I mean, they're going to benefit when Bed Bath & Beyond files for bankruptcy. I know all the memes love it. It's up 32%. I mean, it's like from $1 to $2. That's just people covering because they're short, and if it stops trading, they're stuck in the stock. Frickin' idiots. These people, by the way, these meme people, I did some tangling with them the other day on AMC. I mean, they're lunatics, and they don't know what they're talking about. I mean, anyway, we'll leave it at that. We filled the gap, pulling back. If you're long, look, I told you it needs to hold 474 half. I'll stick to that. If you want to up that now to 475, that's fine too. If you want to use 478.14, that's good as well. But I am anticipating some resistance here, and then also up between the 50 and the 100 MA. So you kind of missed a lot of it. But, Costco, obviously some allocation money. It is benefiting, of course, from the bankruptcy of a competitor. But I mean, I don't really know what to do with this chart. It just looks very, jigsawish. That's just how it looks to me. I call them how I see them. So yeah, I gave you the level if you want to be long against that. If you start losing it, I guess you could be short. I don't know that it's a 1-to-1 correlation right away with them, but Costco's a pretty well-run company. Obviously, membership stuff. I mean, if you like that, though, Amazon too has that with Prime, which they seem to keep charging more and more for. And now they're going to have that Prime shopping, which is going to be something else. Anyway, Google, I told you I like buying a little down here. I would love it even more between 80.74 and 82.21, and if we could get back all the way to the 2020 highs at 76.54 and fill in the gap to 77.84, I'd be an interested buyer down there. Maybe it happens on earnings, but we'll see. 50 MA is the must clear. It's roughly been some resistance. Google's cheap. They got a lot of money to buy back stock. I do worry about the investigations that are coming from them, and the Republicans are going to be coming for them, let me tell you. Facebook, all of them. So we'll see how that goes. But if it can clear the 20 MA, I think you got at least a quick trade up to the 50 MA. So over 88.42, you could get to 92.57. How do you like that? How do you like them apples? Meta. We liked it lower, and now it's a lot higher. I will say that. It is into some resistance, and now everyone's all bullish on it. Freaking geniuses. I still like trimming into this area because this is where it broke down from, but it could get itself back up to 154s. Look, this is a cheap stock. They still make a lot of freaking money. We'll see what happens with the earnings. I do think that this year the weaker dollar will be a bit of a tailwind for them. Any pullbacks on this that are sizable, I'd probably be a buyer. And maybe after the first couple of days, this was 1, 2, 3, 4, 5 or 6 days down. If we get a gap down on earnings, that would interest me. To kind of reset the puck. But this does look like we have a trend break, and it's an accumulation funnel. So I don't know if we're going to get all that, but I would be a 50. I'd probably start nibbling if we got a pullback between the 50 and 20 MA zone, though. But I do like selling a little here. And if you want to do some kind of a call spread, 135, 155. Very, very simple setup there. Let me take a look at that, actually. Meta. Because that might interest me. Just look at February. 155. Let's see, 135. Yeah, so $6 for potential 20 points. If you want to sell some out of the money put spreads to finance that, that's cool too. I wouldn't do anything above the 50 MA though. So yeah, I guess it would be 115, 105 or 115, 100. I wouldn't go too crazy there though, because the VIX is kind of low. So I'd rather just do the call side and then do the puts if it pulls back. Netflix. Everyone's excited about this one now. Look, we liked it lower. I still don't hate it here. I do think, though, that this zone is going to be some to sell into because that's the full gap fill. If it gets back up to, like, let's say close to 350, 348.61, I wanted it to pull back to the 100 MA and 200 MA area, but maybe that'll happen on earnings. We'll see. But I don't love that it's running into numbers. I will say that. And they're the first of the big momos to report. So as Netflix goes, as the FANG names will go. Usually the first one or two go one way, and then the other ones go the other way. I will say this, though. It's rallied back a lot. This earnings was up. The last earnings was up. 3 is a charm. We'll see. But the more we rally into that number, the less I like it. Disney. I re-put it on, right? I did the ratio. I think I'm back in it. It's held in the 50 MA, which is impressive, but if it does pull back again to 85 or even 80, I'd be thrilled. I'd probably start booking some if we got back to the 20 MA around 90, though, but it is coming up. I do think there's room up to the 100 MA. Oddly enough, it could see a hundo again. I'd be very careful if this rallies into numbers, but again, this was oversold on tax loss selling. World Wrestling Entertainment. 77-year-old Vince McMahon big, I mean, a legend to kids from the 80s and 90s. They're selling the company. They hired, I think they brought on JP Morgan, so it'll probably go back up to 100. I'd be careful if it gets back below 85.93 now, but they're going to sell the company, so that's going to be over soon. I guess, he was 77. He came back to the company to sell it. I remember when him and Trump actually had their rivalry on the show, and Trump shaved his head. If you go to YouTube, you could watch Vince McMahon get his head shaved by Trump. It's hilarious. Oh man, those were the days. That was a little after. I was into wrestling like back in the early WrestleMania days. Anyway, booking. It's coming into some resistance between 2,228.99 to the 61.8 at 2295.91. I'd be trimming it if it gets below 2166.26. I think you could short it, but as long as that holds, it's still kind of bullish. That's the must hold though. But I would be a seller up into this area, particularly coming into earnings. I don't know why they don't split this stock. It is so freaking annoying. MDB, Mongoed. All right, so very, very simple here. I told the gentleman in real time, because sometimes, you ask me, and then, if you get a weak close or something, I could have saved you, like, some pain. So I try, if I see something that I think is time. Oh, really? I thought I made it red. Guess I made it white. Oh boy. I'd use the 50 MA as a stop now. 174.14. And I'd probably be a seller into the 20 MA because that's the trend line. I don't really see much here. I don't even really know that much about this company, other than I get requests and I do charts on it from time to time. So it's still in a downtrend, and I think the 20 MA will likely be some resistance. Again, caught between the 50 and the 20, but in the wrong direction. ISRG, not one I trade often. I have, but it's rare. So you had a head and shoulders top. It got whack-a-rootied. It's back up into some resistance. Also, 50 MA below there is a short. As long as it holds, it's okay. So 261.80. If it loses that, I think you could come all the way back down to 244.93 to 236.13. Basically, if you could get down to the 100 and 200 MA confluence. So if you're long, you could always buy 50 MA puts and sell 100 MA puts. I like that as a hedge. It's up against where it broke down from, so it doesn't surprise me that there's some resistance here. Would I be a buyer on a pullback? Yeah, I mean, I don't see why not. Shorter term, let's draw in some trend lines, and here, you're right on it. So it's got to hold 150 MA. Below there is short. Actually, what was the low of day? 263.33. Probably not going to chase it here long. But if it does break below there, I might try it short. And they're reporting soon, so that's probably why you were asking. I would trim out of some, and I'd put on a put spread as a hedge, and I'd probably sell some upside calls at or above 300 to pay for it. There you go. Little JP earnings discussion. CF. Looks like it's trying to form a head and shoulders. 70, not a nice day today, that's for sure. The 2015 high is down around $70. I'd probably be into buying it closer to 56 if we broke down, because that was the 2018 high and just below the 2 times range of this candle. It didn't even check back to 90 quarter, which is interesting to me. It's not down enough really to interest me in a buy, but I'd be careful now with it below 90 quarter. And if it loses 79.18, it's probably going to go down to $70 and maybe even lower. If it rallies back up into, let's say, the 100 area, I'd probably be a short. And I'd be selling if I were long. Anyway, have a great rest of your week. I will see you for the weekend video, late night Friday, early morning Saturday. let your friends know I'm running a promo, I guess, New Year. So if they want to try the service free for a month, they could use promo code FREE on my site. I have a link for it in my bio in my Twitter profile. Cheers.